Hi friends, welcome to Connexo Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the derivative patterns, uh, derivative data, candlestick pattern on Nifty, Bank Nifty, as well as on the different asset classes. First of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that markets were oversold. We were expecting a bounce back from the lower levels. Bounce back did came, but we have seen that due to the global events which are taking places, the banking crisis, uh, global banking crisis, as well as geopolitics, we have seen selling pressure coming in at the higher levels. So let me just take you to what we have been mentioning in last 2 weeks. Last 2 weeks we have been mentioning regarding a pullback or a counter rally, but that view is not playing on our expected lines. So definitely markets were into oversold territory, but the follow-up buying was not seen. Any pullback was witnessing strong selling pressure at the higher levels. So friends, now first of all, let us discuss the global, I mean to say US CBOE VIX index. Then we will discuss India VIX, and then we'll go to or we'll discuss Nifty and Bank Nifty. So friends, now let us directly go to the CBOE volatility index chart. This is the CBOE VIX chart. Now you can see this resistant trend line has been maintained since April 2020. If you see this, the resistance CBOE VIX has taken, it has taken 10 times resistance. This was the 10th time which we have seen on 13th March. After that, we have seen Dow Jones has managed to bounce from the lower levels. But again, as I said, due to the global events, the banking crisis, we have seen selling pressure coming in at the higher levels. But if we simply just go to this particular charts and if we try to analyze, we feel that Dow Jones, the international markets as well as the Indian markets might be in the process of making some temporary bottom around these levels. I'm not saying that Friday's low or Thursday's low was the bottom or could be the bottom, but might take some time to make bottom around this area. But the journey is going to be highly volatile. It is going to be a double-edged sword for traders. One should trade with strict stop losses. But as I said, from these levels, the simple opinion which I would like to have or make is buy on dips should be the strategy. One should not play for huge moves. I mean to say 3% or 4% move in index, Nifty and Bank Nifty. Just try to play half a percent or 70 bips percentage of move in Nifty and Bank Nifty. So this is the volatility index of US. We feel that bottom could be uh, around the corner. Maybe it will take some time, but we are somewhere near around the bottom. Now let us go to the India VIX chart. Now you can see India VIX also has a similar kind of pattern. You can see the resistance trend line. It has managed since February 2022. You can see multiple times 1, 2, 3, 4, and 5. Maybe 4 to 5 times it has tested those particular levels, and after that we have seen that market had started bouncing from those particular levels. Again, you can see on Thursday, India VIX had tested that particular resistance trend line which was managed since last 1.5 year. Again, VIX is getting weaker, volatility index getting weaker has an inverse relation with the markets. So if volatility index falls, then we might see market rallying or a counter rally or a short covering rally from these particular lower levels. So this is uh, what we have observed on the global volatility index, which is clearly indicating that the global markets are somewhere near to make bottom. I'm not saying Thursday or Friday's low is the bottom, but maybe around these levels we might see the bottom formation. Yes, it will take some time, but it is going to be highly challenging and highly volatile. Now friends, let us go to the Nifty daily charts and let us discuss what we have observed in Nifty daily charts, and we'll try to figure out what could be the trend. Now this is the Nifty daily charts, the falling channel which we have been discussing since long time, since last three and a half, 4 months. Now here you can see last week this channel was breached. We were expecting, after this breach, we were expecting that market might fall further from this level, or we might see follow on selling from the breakout point, but that didn't happen. It traded 2 days below this particular support line, and again on Friday it has managed to again re-enter this particular falling channel. This could be a classical example of a bear trap. I'm not saying it is a bear trap, but it is a classical example of a bear trap. Now here you can see RSI is also showing some sort of positive divergence. Here you can see prices making lower tops and RSI is slightly making higher tops. Now on Friday, let me stretch the chart. On Friday, what we have seen that Nifty had made a long-legged doji. On Thursday, similar kind of pattern, a long-legged doji, which is a slight indication that market is round making bottom. We might see a counter rally from this level, but looking at to the international markets on Friday, we might open on a negative note on Monday. But after opening negative, maybe around 17,000, which is the psychological mark, and that is if we open 100 points down from these levels, so which is coming around 17,000 mark, that should be the right area to enter long at the lower levels. Now looking at this particular data on the upside, 17,222 would be the first resistance line. It on hourly charts it is making an inverse head and shoulder pattern. I will show you. Now you can see this. This is the left shoulder. This is the right shoulder in making. Sorry, head in a making, and then some left shoulder, and then a breakout. So it is in a making. So 2 3 things are showing some sort of uh, bullish outlook or bullish indication from these levels. Now here also you can see on weekly charts, the candle has ended inside the support trend line, which is at least some sort of positive indication at this juncture. So most probably looking at this pattern, we feel a 100-point dip in a Nifty should be used as a buying opportunity, but immediate resistance would be 17,222. Now friends, let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed at 16,958. Below that, the second support is placed at 16,850, and below that, the third support is placed at 16,747. On the upside, the first resistance is around 17,222. Above that, second resistance is around 17,324, and third resistance is around 17,529. These are the important supports and resistance level in Nifty for the next week. Traders should try to follow this level and trade in the direction of the breakout. Now let us discuss the derivative data of Nifty. You will see on the screen the call option data of Nifty. In Nifty, the action was seen in 17,200 calls, then 17,300 calls, 17,400 and 17,500 calls. Now here you can see there has been a rise in the open interest, rise in the volumes, but the rise in the premium, it is almost flat. Flat to positive, flat to negative, slightly negative. So it is neutral. Implied volatility is low. It is between 12.44 to 13.51. So low implied volatility is indicating that markets are well poised to rally from these levels towards the upward trajectory. Maybe, as I said, 17,222 is a major resistance in Nifty on charts. Here, if we look at the open interest and volume data, here it is clearly indicating that 17,200 calls could be the first barrier, and if it breaks, then we might see a sharp rally towards 17,400 to 17,500 maybe in the next week. So one needs to be highly cautious if anybody is short in the markets. Now let us check out Nifty put data. Now we will see in Nifty puts the action was seen in 17,000 puts, 16,900 puts, 16,800 puts, and 16,700 puts. Now here you can see there was rise in the open interest, rise in the volumes. Impact volatility is between 12.68 and 14.50. Now here you can see there has been a sharp drop in the option premium, which clearly indicates that the smart money has already started writing Nifty out of the money puts, and that is indicating that at lower levels 17,000 could act as a very strong support. You can see the open interest as well as the volume concentration. So definitely 17,000 could act as a important support as well as it is a psychological mark. So that should be used as a buying opportunity. And this drop in an option premium is clearly indicating that the smart money has already started writing out of the money puts, which will propel Nifty to move upwards from this juncture. And if there is a gap down opening on Monday on the back of the US market weakness, that should be used as a buying opportunity. So the strategy should be buy on dips in the markets, at least for the next week for a bounce back rally. Now, friends, let us discuss what we have observed in Bank Nifty. Let us discuss the charts of Bank Nifty. Now you can see this is the Bank Nifty daily charts. On Bank Nifty daily charts, you can see Bank Nifty has been falling in this particular falling channel. You can see multiple overlapping of these waves, and it is a perfect channel. Now, in this perfect channel, as I said, our prices are making lower tops and RSI is making higher highs. Classical textbook pattern of positive divergence. Now, as I said, Bank Nifty 2 days long-legged doji, similar kind of formation as we have seen in Nifty. It is a mimicry of that particular pattern. Long-legged doji on Thursday and long-legged doji or a hammer on Friday. Now let me go to the weekly charts. Weekly charts, you can see a hammer kind of pattern with a very long shadow. It is within this particular falling channel, which is itself showing a strong strength at the lower levels. Now, as I said, looking at this particular candles, I feel Bank Nifty might see a sharp rally from these levels. But as I said, the global markets are weak. If there is a negative opening, maybe if Bank Nifty opens weak, maybe around 39,300, that should be the best buying opportunity, or that should be an opportunity to enter long in the Bank Nifty at the lower levels. So, friends, now let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 39,353. Below that, the second support is placed at 38,926. The third support is placed at 38,613. On the upside, the first resistance is placed at 39,919. Above that, the second resistance is placed at 40,341, and third resistance is placed at 40,839. So these are the important supports and resistance level. Traders should follow these levels and trade in the direction of the breakout. And once again, I would like to say the strategy should be buy on dips from this particular lower levels. Now, let me discuss the derivative data of Bank Nifty from these levels. So let us check out the Bank Nifty option data, call option data. In Bank Nifty, the action was seen in 40,000 calls, 40,400 calls, 41,000 calls. Now here you can see there has been rise in the open interest, there has been rise in the volumes. Implied volatility is between 17.46 and 17.89. Here you can see there has been a positive change in the option premium. So definitely the smart money has already started buying out of the money calls, which is clearly indicating that Bank Nifty is about to rally from these levels. But looking at this particular level, we feel that on immediate basis, 40,000 could act as the first resistance, and if it breaks, then Bank Nifty might test the level of 41,000 at least in next week or next 10 trading sessions. So, looking at this particular call data, we feel that markets are positive. Any dips should be used as a buying opportunity. Now, friends, let us check out Bank Nifty put data. In Bank Nifty puts, the action was seen in 39,300 puts, and 39,000 puts, and 38,500 puts. Now, here you can see there has been rise in the volumes, rise in the open interest. There has been a significant drop. Implied volatility is rising. 17. It is between 17.4 to 20.2. Rising of implied volatility is clearly indicating that strong uh, put writing has already been seen in this particular data. So we feel that any dips should be used as a buying opportunity in Bank Nifty. And on the downside, we feel that 39,300 should act as a major support from these levels. So that should be used as a buying opportunity. So friends, now let us come to the last segment of our show, which is positional call. The name of the stock is UPL. I've identified this stock, positional call. The stock is looking good at this juncture. You will see on the screen the chart of UPL. Now this is UPL. The stock has formed a triangular formation. It is not an exact triangle, but it is almost some kind of we can call it as a triangle. But most important thing which I would like to suggest is that it has broken the resistance trend line, supported with strong volumes, multiple support it has made. Almost it is double bottom at 687. RSI is showing positive divergence. The stock is quoting around 715. So any positional traders, swing traders, short-term investors can buy this stock. Currently, the stock is quoting at 715. One should buy or accumulate the stock on dips to 709 for an upside target of 740 in short to medium term. Short to medium term means maybe next 2 to 3 months. So, friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.